As financial advisors, we are numbers driven, metrics driven. And so technology is very hard for us because how do we put an ROI, a return on investment, on each of our technology purchases and spends that we have every month? That's what I want to talk with you about today. My name is Matt Reiner, and I want to talk to you about how you can start putting an ROI calculation on each technology you're currently using and that you may purchase in the future. Time equals money. We've all heard that saying. The amount of time that we have, we got to determine how we want to utilize it. We have a pie of time, and we've got to split it up in the right ways. Today, 30 to 40% of our time is spent doing menial, mundane tasks within our firms. Going and scheduling meetings, responding to emails, pulling reports, pulling data, and then doing some analysis. Whereas we should be spending more time talking with our clients, providing them insight into what the analysis means to them in their specific situation. That's the value that we provide as a financial advisor. And so when you look at a technology solution, you gotta start looking at how much time each technology solution is giving you back. And if it's allowing you to scale yourself, means that you may not need to hire another person for a little bit longer, which is valuable to the firm as a whole, both employees because they can start doing higher value items, and to owners of a firm because more falls to the bottom line. And so the question gets to is how do we get to that point? Well, we have to set a baseline. We are a metric-driven industry. We love metrics, we love analysis. And so we have to set some metrics for our firm from the outset. So we have to have clearly identified processes and standard ways that we do business and workflows to clearly understand how much time we're spending per client, per task, to go and perform a specific action for that client or for that workflow. And so once we identify that and we get some clear definition of what that time is, then as we go and adopt new technologies or we better integrate our current technologies, we can start to see, okay, within this one specific process, it was taking us 15 minutes to go about opening an account with all of the actions, emailing the clients back and forth to get the account paperwork back, setting up the account via the DocuSign, etc. It took 15 to 20 minutes. So what we then can do is there a way for us to better integrate our CRM in our DocuSign or our CRM in our custodial data feeds or our custodial platforms to get that information in to eliminate 2 or 3 minutes off of that workflow? And if we're able to do it, then we now have a baseline of understanding what our true ROI is on that integration between technologies or that adoption of the new technology. Because if we're doing that task, opening accounts, 100, 200, 300 times a year, and we're able to save 3 minutes, that's 600 minutes. And I'm sure you all know what your value is on an hourly basis, and take that 600 minutes, convert it into a monetary value based on your hourly rate or any other employee's hourly rate in your firm, and now you're starting to see some of the actual ROI on the technology. And thus, you're now able to make better decisions on which technologies you should invest in, which technologies you should eliminate, and what the value of putting in time today means to you and your firm in the future. And finally, you can create this baseline of an ROI to allow you to make better and more informed technology decisions and integration decisions and time decisions on where to spend your valuable time within your firm and on your business every single day, week, month, and year. If you haven't already done so, subscribe to this channel to continue to get alerted of more content just like this, helping you continue to grow. And if you want some written content and other videos and podcasts, head over to mattreiner.com, MattReiner.com.